sugar daddy and investment life bring you freedom of financial.
Hello everyone. Today the Nasdaq rebounded sharply by 2%. The main reason is that Trump posted on social media saying that the relationship with China isn't that bad and there's still room for negotiation. He also expressed hope that China won't further restrict rare earth exports and showed some goodwill. As soon as these remarks came out, the market reacted strongly. Everyone felt the same way. So it turns out that the relationship between China and the US isn't that bad after all. Maybe, just maybe, Tariff 3.0 won't happen. And investors, they started to feel a sense of FOMO and all of a sudden they rushed into the market in a frenzy. As a result, the market immediately pulled back at first, but by the close, it still ended higher with a full day gain of 2%. This rebound was mainly because Trump's post temporarily eased the market's concerns about the China-US standoff. For now, if there's no further negative news, the stock market should continue to fluctuate at a high level. But it's important to note that this rebound doesn't mean the problem has been solved. After all, between Trump and Xi Jinping, there still isn't any concrete agreement. Right now, it's just an improvement in the atmosphere, without any real concessions. In fact, China had already stated earlier that it's willing to invest about $100 billion in the US market and at the same time would make large purchases of agricultural products, right? Beef, soybeans, corn, and so on. They hope to use this economic gesture to get the US to relax its restrictions on technology exports. But the question is, can Trump really ease those technology restrictions, and if so, by how much? There are quite a few hardliners within the Republican Party who are determined to suppress China's technological development. They don't want China to catch up too quickly. Especially when it comes to chips and the field of AI semiconductors, if Trump were to relax restrictions in these areas, he might be criticized by people within his own party for being weak, and it could even affect his chances in the election. Even if he wanted to make concessions, it might not be politically feasible. So then, why is China playing the rare earth card? The first reason is that China is worried other countries like Pakistan, Vietnam, or Australia might use China's refining technology. If they export rare earth products to the US, then China's monopoly position will be weakened and this card will become worthless in the future, right? For example, recently Pakistan signed a multi-trillion contract with the US to export rare earths to America, so it seems like Pakistan isn't really that close to China after all. The second reason is that in recent years, the US has started to reorganize its own rare earth supply chain. For example, they've reopened the Mountain Pass mine in California, invested in Australia's Lynas, and are even planning to build a new rare earth refinery in Texas. In other words, if China doesn't play this card soon, it might miss its chance. In a few more years, this card might not even be available to play anymore. So why is China making a move this time? They want to make the most of it, to use this card to its fullest extent and maximize their bargaining power. Even if Trump does end up meeting with Xi Jinping, whether they can reach an agreement is still unknown. As for the American Chamber of Commerce, they've actually already warned Trump not to make concessions too easily. He needs to maintain a tough stance, and on the Chinese side, they won't be completely satisfied just because of some symbolic gestures of goodwill. The core issues remain. The problem is that issues like technology exports and tariffs are not easy to resolve in the short term. Right now, the average tariff between China and the US has already exceeded 50%. According to The Economist's analysis, the actual cost of these tariffs is mainly borne by American importers and consumers themselves. So far, inflation hasn't surged again because companies are gradually passing the costs on over time, spreading them out instead of raising prices all at once. These costs haven't been fully absorbed yet, but the longer this goes on, the greater the pressure will become. When that happens, American consumer confidence could decline again. Recently, the US labor market has started to weaken, job openings have continued to decrease, and the labor force participation rate has also slightly slowed down. The consumer confidence index has dropped for 2 consecutive months. Although the stock market is riding high and supporting sentiment, this atmosphere may not last for long. On top of that, earnings season for the big tech companies is coming up. If one or two giants like Tesla, Nvidia, or Apple report results that are worse than expected, the market could see a short-term correction at any time. So I've decided to reduce my stock portfolio by about 20%, keeping more cash on hand to prepare for a possible correction. With the stock market fluctuating upwards right now, it's actually a good time to gradually take some profits off the table. Wait until the market has a clearer direction, whether that's when the China-US negotiations yield results or when there's a clear shift in the inflation trend, right? It's not too late to consider increasing positions then. This time, the stock market rebound is mainly driven by sentiment, not by fundamentals. Unless China and the US really reach a concrete agreement, like reducing tariffs or resuming technological cooperation, otherwise the market will continue to fluctuate at high levels.
Please subscribe and follow New York Daddy Investment.